All right, good morning, good morning, good morning. How you doing? Mickey the Mac Daddy make you want to jump, make you jump. G'day, mate. Okay, we got sound over there. I'll leave that alone. How you doing? Actually, you know what? I'll move it here. I think that should be good as well. Good morning. Come and tell you. Let me pop some charts here while we get ready. How you feeling? Peter, well, I wouldn't say over, no, but it has been challenged lately. I thought it had a good setup though last week, but we can double check that if you want. What would you like me to cover today? Aussie yen, okay. Kiwi Swissy, sure. All yen pairs, okay. Miguel, all yen pairs. You know, funny thing is, if I charged $1 for every pair, suddenly it wouldn't be all pairs. Like, oh my God, I have to pay $1. Not you specifically, Miguel, but it's funny how human nature is, right? You're like, cover it all. Yeah, sure, I'll do it. You know I'll do it anyway, so I appreciate that. Euro yen, pound yen. Morning, Maida. All right, well, without further ado, thank you for being here. I love you. So let's get on with it. Let's go. Happy Thursday to you, Johnny. So thank you for being here, my favorite hour of the day, hanging out with you. However, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne. I am a vampire. What's happened here? No! Hang on. Wait, a little better, huh? Look, it's Bob's Big Boy. Gee whiz. Morning hairdos. Anyways, hey, good morning. My name is Wayne. Nice to meet you. Thank you for being here. Today we will conduct technical and fundamental analysis with the overriding goal of helping you put together trade plans. Awesome. Make sure you thank Traders Way for bringing these webinars into your life. They are the sponsor of Forex.Today, so please show some respect. Visit tradersway.com, open a demo account. Honestly, 30 seconds, you're in. Then download MT4, and then pa-chow, play some trades. Fast execution speed, low spreads, huge swaps, world-class customer service. Awesome, right? So when you do develop the skills and the confidence that are required to trade real money, when you get to that point, make sure you pay it back and choose Traders Way as the prime brokerage to your successful Forex trading business. Okay, with that being said, now what? I am open to covering pretty much anything that you want to cover technically. I also have a calendar to reaffirm where we are. And then, of course, tomorrow, non-farm payrolls live. And I really don't know which one it is, but it's like 170 months in a row or something. So I don't know where we are. 13 and a half years of doing that. Yeah, Joey, we'll do Aussie yen. Okay? All right. Resources for you. I do these daily webinars for free. Awesome. So you can be here every day. Make sure you subscribe. Make sure you like. Make sure you comment. If you subscribe, you get notified. If you leave comments, you're simply telling YouTube this is quality content. It's your community. That's how you support it. Okay? Then naturally, what's happened over the almost 20 years I've been doing this, people say, hey, I need this written down. Good, I wrote a book. Go to Amazon.com, Strategic and Tactical Forex Trading. Then you're like, hey man, I could use 30 or 40 hours of training videos. That's what FX Bootcamp is. Then you're like, hey man, I need a live trading group, somewhere that we can plan our trades together live. Okay, that is swing.fxbootcamp.com. Then you're like, hey man, I just need you to work with me. I want you to watch me trade and give me feedback and improve me. I want you to hold my hand. I need a coach. That's live.fxbootcamp.com. And then someone else might say, oh, I just need your tools. I just need your templates. I just need your layout. If I had your MT4, I could be better. Where do I get all that? Well, that's metatraders.com. So it's all there for you. Okay? Whatever resource you need, I'm trying to build for you. And then, of course, I'm working on super secret stuff up here. Cool. So, and yes, this Eddie Monster, this is true. I don't know what to do with it. I don't want to shave the sides and grow a beard and be millennial. But maybe I have to. I don't know. We'll figure that out too. Sorry for bringing that into your life. Okay, where are we here? Let's shut this. Beep. All right. So, well, I guess we'll start with Euro Yen. Cool. Okay. Cool yen. Okay. Can you figure out what I'm doing here? It's where we left yesterday. Bullish global macro. Can you figure out what I'm doing here? It's a losing trade so far. The thing is there logic to it? Is there intelligence to it? WTF am I doing? Yeah, we'll do euro dollar. Well, besides selling, what's the logic of the trade? Or is this just me randomly throwing? I'm front running next week. Okay, that's good. I'm not waiting to buy. No, I'm already in, and it's a sell. See, I'm asking you to critique it, or at least think about it. So why did I sell at 120.64? The question is, why is this considered front running? I'm trading based on what I think will happen next week. Okay. Well, a couple of things then. We'll go through this. Okay, you can see we've bounced off of some sort of support area. Cool. Okay. So if we are to breach that, we're going to need a lower high, lower low. Okay. So I'm thinking this on a much higher time frame. Okay. Not a 30-minute chart, but maybe a daily chart. Okay, cool. Then I look left and I say, where's the next level of resistance? And I say, well, that was support in the past. It could be resistance. And then I should probably do something similar with this. I might say, okay, whatever. Okay. Then I look at next week's weekly pivots. And of course, I did this on Wednesday. It's now Thursday, but on Wednesday, I'm planning Monday's trade. And I said, well, this looks okay, and this looks better at 121. I even drew this as a reminder to myself that I could sell up there if I wanted to. So I had to make a choice yesterday. Do I add a second trade to a loser or not? And I'm like, Yeah, so anyways, I didn't. So what I'm thinking here, and of course I could be wrong, what I'm thinking here is it might just kind of do this. That was fat, huh? Maybe. That's all. Just a trade. Okay. And you can see I was better off on the higher one. I didn't know that then, but I suspected it. But, you know, that's the best trade. That's next week's M3. Okay? Let it go. What should we do next? Pound yen was one I was interested in. You can see I'm on a 5-minute chart here. Let's bump this out. And you can see I was planning something. Do you remember yesterday's setup here? Yesterday, you and we talked about this being much more range bound. So I marked it out this way. And we concluded that we were nearer a sell zone than a buy zone. Okay? You see this? That's sort of the idea. And then the tactical part is you were waiting in here for a sell. And then you can see what I was doing last night was I was dragging this across looking for a head and shoulders. I didn't get it when I was at the charts. That's how it goes, Crimea River. But I was looking for this and then this. The target being down here, as we indicated yesterday when we were over here. Is it starting to click? So let me ask you something. If you were a bear on pound yen and you were watching this closely, would you be short either in level A or in level B? If you were a bear and you were watching this like it was the only thing you traded, would you be in one of those, A or B? Remember, you would have been a bear here, 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 you know. And this one you're like, I like this, I don't really like that, I certainly don't like this, this is scary, absolutely no, probably not, absolutely for sure, absolutely for sure. And that's all you're doing. But that's what I want you to do is simplify. Simplify, simplify. Because look what we know. This goes back weeks, or no, certainly days, but I think weeks. And we know this. So this is what we talked about yesterday, right? So which means you're interested in selling here, interested in taking profit here, interested in selling here, interested in taking profit here, because that's range bound. Steven says 2155 cross. Yeah, but you probably wouldn't rely on a 2155 cross in a range bound market. Because technically, I think of it this way. There are bullish markets, there are bearish markets, and then there are situations where it's not bullish or bearish. So therefore, it's not really a market. It's not bullish, it's not bearish. I don't consider really neutral being a market. So really, Stephen, in this scenario, you know, I'd almost delete, at least mentally, I would delete the 2155. And all I have is price. There is no market. It's not bullish. It's not bearish. So there is no market. There's no trend either. So you could delete the 200. You could delete the 2155, and there's only price. So I'd rather you think price, 5-8 cross down, sell, 5-8 cross up, take profit, 5-8 cross down, sell. Okay? But even then, my longer term view of it would be like, why would I take profit here if I knew my target's there? So really what you're trying to do is, sell this, and then, of course, because you know how to do price action, you would expect it to, now, right, this, and then you would sell here in the future. And eventually you would probably do this. You might even sell one more time in here, and then you'd take profit on everything here because there is no hope. Meaning you don't think, oh my gosh, this might just break lower. No, that sounds like hope. All you know is this is a sell, this is your take profit. Okay? And in there'll be bearish price action. Down, 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 down. Up, up. So, down, 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 down. Up, up. Sell. Down, 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 down. Up, up. Sell. Right? Down, 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 down. Take profit. Huh? Is it starting to click? Down, 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 down. Huh? You got it? Yeah, boy. By the way, I got to say something. As you know, I try to read every single comment left, and you guys leave lots of comments, so I appreciate that. A few people have given me very critical feedback, and I appreciate that. I wanted to say something, though, because they said over the last few years, and I guess maybe the time I've been at Harvard or something, obviously, it's an additional stress to my life that I didn't have before. And the feedback was, I'm arrogant and egotistical and all this kind of stuff, which is fair. I've gotten that feedback in the past. I don't mean to be. So I'm not sort of defending that I'm not or something. So if I am, I'm sorry, is what I'm trying to say. But also, if I talk about that I'm tired, or if I talk about, my schoolwork at Harvard, or if I talk about the other things that I'm doing on top of Forex and all this kind of stuff, I think by some I might be misunderstood. What I'm trying to say, okay, and this is my message. I'm not defending myself. I just want to make it clear what I'm trying to say. I don't mean to be an arrogant asshole, but it can happen for sure. What I'm trying to say is, I know you can do this, and I know our lives are complicated, and then we have lots of things going on, things that are pulling us away from our charts too, right? So what I'm trying to say is I suffer those same stresses, okay? And I'm trying my best to get through them and still do a good job and, everywhere, still be a good husband, still be a good student, still be a good coach, still be a good trader, all these different things, right? And it's a struggle. It's really a big struggle. So my message to you is not that I want to be arrogant or something. It's more that I know you can do this and you're not alone. You're struggling through many distractions as well. And we're doing this same thing together. That I'm in the same boat. Yes, right? Okay, you understand? Like, we are in that same boat and you can get through this. It will take sacrifice. It is not easy. 20 years from now, it's, you know, you're still going to have some of these same struggles, but at least you're not doing it alone. No, I get that, guys. So again, I'm not trying to say beat up these other people or all that kind of stuff, right? Okay? So, and also this idea of when I say people are stupid or people is stupid, I'm not talking about you. I'm talking about the general masses, and in particular the ones that we're competing against, right? So anyway, so I would never belittle you. Of course, that is not what I'm trying to do. So I guess I don't want to seem like Superman is another reason I'm sort of bringing this out. I don't want to be the Superman that can do everything, that has all these powers, that can fly, has super strength, I'm bulletproof, I have laser vision, and if I want to go back time, I just fly out into space and spin the earth and I come back down and my hair is perfectly curled and I'm Superman. You know, no, I'm a flawed human being, right? I'm a flawed human being. I struggle at lots of things. I'm trying to improve in lots of things, right? So I'm much more, you know, if I had to be a superhero or something, I'd be more like Batman. You know, I'd be the guy that lives a flawed life but is trying to make the world a better place, but then goes home and has, you know, emotional problems with other people, struggles to, you know, all these things, right? Life is complicated, and I'm just trying to do my best, just like you. So I just wanted to say that. So I'm not defending myself. I'm just trying to grow as a human being. Okay, cool. Okay. Okay. Yeah, the grind is real. Absolutely, Ryan. I haven't found it easy yet. Classic Superman scene by the... Yeah. So, no, I'm not a superhero. No, I'm not a perfect trader. No, I don't live a perfect life. No, I don't drive a yellow Lamborghini. No. But I am a real person. Okay. Okay, so anyways, let's take a look at this. Again, two flawed trades here. Okay, two flawed trades. But I think you can see what I'm trying to do here. I think, right? I have a resistance area in here. Okay. And I don't remember this one. I'm sorry. I might have tried to kick off here. Okay. So essentially, you know, and of course I think this has changed over time as well. Okay. So I'm still thinking this. Well, thank you guys. Thank you for the emotional support. I do appreciate that. Okay. And the fact I take the feedback and criticism seriously shows my respect to you. Okay. So anyway, so here I am in two flawed trades, right? But what are you going to do? What are you going to do, huh? What are you going to do? Is it a bad trade? Are these bad trades? To me, they're kind of the same trade, but are they bad trades? No, I don't think so. Well, is it possible I'd lose money on here? Oh, for sure. But it's not bad. I mean, I think it's pretty reasonable to think this could do this. Okay. And we'll see what happens. We'll see what happens. That's all. Stephen says global dairy down 4.7. Yeah, I mean, all of Asia Pacific's being impacted by the coronavirus, right? So I think I heard somewhere like iron ore demand is now down 50%. No, no, no. This is the trade I'm in that's profitable. Yeah, 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 yeah. So, anyways, Beast, look at this down, 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 down. I guess I forgot that. Here's the next sort of step, guys, is they down, 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 up, sell. Okay. Price action. It's not a great entry because we're kicking off the bottom, but if you're a bear, you're looking for these things, right? It's a Fibonacci move type thing. Okay. So you can see a 382 predicts a 1382 predicts a 382, sorry, shoot. 618 predicts a 1382. Okay. So that's what it's saying. And then you would get a breach, and then you get a, right, and then you get the new drop. Okay, so we get that. So there's the ends. We got it. Swissy. Yeah, we'll do Swissy. Michael says it's interesting that the virus can cause so much fear. Well, right. Word on the street is if you live in China, you're working from home. Now imagine that small fact, whether it's everybody or a lot of people, right? Imagine the impact on your local economy. You're not commuting to work. So, you're not on the subways. You're not in your cars. You're not going to the gasoline station. You're not stopping at Starbucks, right? You're not going out for lunch. That kind of stuff, right? I mean, just on that small scale, holy schnickerschnocker, would that impact your local economy hard and fast? Martingale is a system to fool you, baby G. It's run fast. Okay? So what it's setting you up for, baby G, is you'll either make a lot of money or you will blow up your trading account. So by and large, it's fool's gold. So just walk away. Just run away. That's it. So the Martingale, you'll see a lot. Like, have you ever seen those services where you could just copy other people's trades? That's the general, that's used a lot there because you'll see that they'll have like, let's say 89 profitable trades in a row. Well, they're all 89 small trades that are all doing the same thing. And then often what you do is you pay money and you get in and you find out that they have 57 losing trades. And you're like, well, no wonder they're 80% or 90% winners because they never take a loss, right? So that's kind of what it's designed to do. And I don't know, just it's bad. It's just bad, 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 just bad, 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 bad. Okay. Cool. So where are we? Swissy trades. Okay, good. Let's start on the left. Okay. Down, 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 up, sell, down, 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 up, sell. I have this all marked out. Down, 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 down. See, I have it all marked out for you guys. So we did this over here. Up, sell. You would have sold it Monday or Wednesday. Down, 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 down. And so let's do like what we did here and what we did here. I would say if you wanted to be a bear on CAD Swissy, you would consider it now or you won't consider it. And that's it's actually a very good thing, because if it goes up to here, you should not consider it, because it certainly leads to something like that. So that's your breaking point, okay? But if you're going to continue in this trend, down, 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 up, up, sell, down, 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 up, sell, down, down. You know what, and let's do it with price action. Let's do a quick price action lesson, okay? Here's the support, right? Drag it across, okay? So you get this thing going. Down, 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 okay? So now you look left, drag it right, up, there's your sell, okay? Down, 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 new lower low, okay? Look left. Okay, see? I'm just looking left. Actually, I probably should do it from here. Okay. Okay. Now you would go the same thing. Okay. That's it. So it's not like a perfect scenario, but you should always, oops, I meant to do that straight. But it's like a guide that you should know in the future you'll be selling around here. You should know in the future you'll be selling here. So now we're in this area. We got this support and this support. So we know, just using price action, that this area is the line of defense for bears. If this is going to continue trending down, that's our current line of defense. That's our Alamo. You got that? And if that's breached, you retreat. Okay. You saw my dog? Yeah, she's around. It's raining outside. There's whitecaps on the lake. She doesn't like that. It's funny. So you could hear her or you could see her. That's funny. You could probably hear her. Interesting. Yeah. Yeah, it's bad, Ron. Like I said, I had tornado warnings yesterday. So funny, I look out my window this morning and I'm doing up my cufflinks, except they're not cufflinks, they're just buttons. And I'm thinking, dang it, I won't be able to go outside and smoke a cigar today. I have it already, though. Look at this cigar. Have you seen it before? It's 4 little cigars rolled together in one cigar. And it's called a pepper box. I guess you won't be able to see that. Anyways. It's not just, yeah, and it's box pressed. Looks like a Snickers bar. It's my kind of Snickers bar. All right, so pound Swissy, aka Pissy. Okay. How many people remember doing this? This might have been the swing trading group. And it looks like I drew it 2 weeks ago. But let's put together the logic, okay? This old support becomes resistance. Now you can see it's not quite right. It's not quite perfect, but it is something I did, right, in advance. Okay? So the general idea is up, 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 down, down if you're a bear. This doesn't have to make you a bear, but if you were a bear, that's what you would look for. Okay. What else do we know in this trade plan? This is my swing sell, my swing low. Okay, that's my swing low, baby. So if I were on a smaller time frame, what would I look for? I want this line here to be respected. What do I mean by respected? Oh, I don't know. Let's say up, down, up, down, up, down, up, down, right? And we're in that scenario now, right? So let's change colors one more time. And I would be looking for down, 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 up, up, down, 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 down. Okay? Oh, yeah. Would you guys be so kind as to click the like button? I'd appreciate that. Just takes a second if you don't mind. Again, it's just telling YouTube that this is quality content. Right now, only 30% of people have clicked the like button. 70% have not. So, guys, if I was on this trip, by the way, it's the same trip as you saw the end pairs. It's the same thing to me. That's what you'd be thinking. Down, 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 up, up. Beautiful respect. Now we need the lower low, lower high, lower low. So it'll take all of next week. But next week, if this works out, most likely, almost for sure, we would hit both the monthly and next week's target. Okay? So this one we planned, again, 2 weeks ago. Okay? Before my little trip. I said, you got to plan on one of two things. If you're a bear, we're going to use the channel and it's going to break down. Okay? If you're a bull, we're going to use support and move it up. Okay? And on top of both of those things, you're going to use the proper swing pivots. There's your swing up. This is your swing down. Okay? AKA, you know, this is your sell zone. And this is your buy zone. You're like, well, they're basically the same thing. Yes, sort of, but it's your intention that's different. Okay? And what do you think? How did it work out? Okay? If you were a bull, you had an opportunity and you had enough time to move your stop to break even, you would have been profitable for a couple of days. Okay? You got that? Plenty of time. Now, if the market had turned, you would have got paid. It's not anything that you did wrong. It's just the market conditions were not favorable. But next time they might be, and the next time after that they might be. Okay? That's cool, right? In this case, it worked for bears. There's our sell zone. There's our weekly target back into the moving averages, right? And now we're in a similar scenario that we were now. It's either going to go up or it's going to go down. I know, right? Thank you. Thank you, Captain Obvious. Well, what is your plan for next week then? Is this your plan? Or is this your plan? It would impact what you do today, don't you stink? Anthony, he's got a cigar and green tea. That's funny. Gurkha Beast. Sure, Max. You know, Max, I try to answer your questions. And in fact, in past webinars, I've spent probably a half an hour only answering your questions. But may you ask a question? 3Bade? Absolutely. That's why we're here. But thank you. 3Bade is very polite. I appreciate that. Yes, Stephen. So yeah, so the way it behaves in here, guys, will impact how I play these other trades. Faux show. What is the proper starting balance? I don't know if there is such a thing. I guess let me reverse engineer what I believe you're thinking. Okay? Because there are two things that matter with how much money you make in the future. Okay? It's how much money you start with and how much, right? And how much time you trade profitably. Okay? So for example, if you can earn 6% a month, and that's actually a big number, guys. The reason I bring up the 6% a month is often when new people come in, they're trying to make 25 or 30% a month. And I say 6 and people laugh at me because it's so low. Well, other times I say 6% to a different audience, they laugh because it's so high. They're like, 6%? Are you a fool? Like, whoa. So anyways, I'm just trying to make a point here. Okay? If you compounded 6% every month and you start with $100 or $100 million, at the end you have 200 million or you have 200. So how much do you start with? It doesn't really matter, okay? There isn't a proper, as you ask, a proper size. There just is. It's just a variable. How much you want to end with matters. So you're like, Wayne, if I start with $100, can I make $2,000 over the course of a year? No. Now, of course, you can, okay? But you wouldn't be maintaining the 6% compounding over time. To put this differently, okay? 6% is what a real estate investor is trying to make per year. Max says, what? Can previous days, weeks, prior pivots be used? No, don't do that. I know it's tempting, Max. And often it seems like something's happening with that. But the truth is, I don't actually believe so. I believe that's confirmation bias. But if those pivots are on top of like psychological levels and stuff, then yeah, but it's not the pivot. Okay? So anyways, guys, how much money you start with times your growth rate over time ends up with how much money you're trying to make. So if you're saying, well, Wayne, if I want to make $25,000 a year profit, how much should I start with? Well, that's different. So you can do the math now, okay? Do the math, and you can probably just ask Google, right? But you can do the math, bust out a spreadsheet, find an investment tool or whatever, but to say, right? Just reverse engineer it. To make $25,000 a year, if I had a starting balance 12 months earlier that grew at 6%, how much would that balance be? Okay? And you might find, you know, this is going to be probably 12,500. Okay? So then you'll say, well, dude, I don't have 12,000, right? Well, then you can't, right? In that case, this drops to whatever you have. You only have 2,000. So now you know at the end of a year, right, you'll only have 4,000. You're like, but I need 25,000. So now you need like 60% a month. So you jack up your lot size so that you're basically using 10,000 to 1 leverage. Not really, but my point is you should be trading mini lots and you're trading standard lots because you're trying to make up for money you don't have. So you're trying to cut out time to get to the money. But anyone that's been here for even a small amount of time will tell you you will lose all your money. Okay? Don't look for ways to cheat time. Okay? You want to look for ways to put in the time. Put in the time on central banking websites, put in the time taking a college course on macroeconomics, take time to do research, take time to plan your trades in advance, take time to develop a bias. Whatever you do, don't cut out the time. Trade small, trade humble. And that's what I say every day, right, Max? Stay small, stay humble. Yeah. And find ways to put in the time. Joe says, yeah, there's a guy teaching that prior pivots are important. I mean, all right. I mean, it's easy to believe, but let's tackle that for a second. Pivots are simply a measurement of the last period. Whatever you're measuring. Period could be period. Sorry, can't think and type right. They are a measure of the last period's high plus low plus close. The reason they're interesting is they show you the top of the previous market. Why is that important? Well, if the top looks like this, you're in a bearish trend, right? So if the first part is you know, the low high versus the previous low high, it just gives you trend. And now close is sentiment. Okay, close. So if you're using monthly pivot points from 3 months ago, you're including sentiment that doesn't exist anymore. But I'm sure if I throw this backwards, you'll say, well, see, Wayne, this was a pivot point 2 months ago. And that, to me, I would look at that as more of a confirmation bias. You're seeing something. You're seeing, because our brain is really good at that. You're seeing a pattern that honestly I don't think exists. It's just because there's lots of lines. And you'll see like, well, Wayne, you got lots of lines here. Well, for whatever reason, I don't typically have this many day pivots on there or weekly pivots. I was just making some sort of point in the training, right? Okay, so we're concluding last week's sentiment into this week, and then I'm looking at next week to set up future trades. But just be careful with the other stuff, okay? I'm trying to simplify things for you. Probably what's happened is they don't have pivots that predict the future. They probably don't have them, so they're using their tools the best they possibly can, okay? And my guess is that strategy probably works okay just because you're trading in the trend. You see what I mean? as long as you're trading in the trend, really what you do to buy and sell. So if you're in a downtrend and you're using an old pivot to sell high, you're probably going to do fine. But it's not that the pivot's working, it's that you're selling in a downtrend at resistance. So that's really what you want to do. And I know you know that, Max. I'm just reinforcing it, right? That your job is to identify the trend and then say, ooh, that's a downtrend. So next time it goes up, ideally somewhere near some sort of resistance, I want to sell. If that's what you can do, you will be profitable as a foreign exchange trader. And if you say, well, you make this determination off of an old pivot, then by all means. But it's not the old pivot. Okay. Cool. So however you guys get to that point, doesn't matter. My way isn't the only way at all. Let's do some commodities. Let's do gold, oil, and Bitcoin. Okay. So our old trade plan that we spent a couple of days creating. Oops. Okay. On Monday, we had it up here. So on Monday, I said, we probably want to buy it here. Okay. Then it fell on Tuesday. So then we were back here on Tuesday. And I said, yep, that's what we're looking for. By Wednesday, we're up here. And now we're solidifying. But remember, price action, we're already looking for something like this. So now the new future is probably this or this, if it's going to remain bullish. Whoop. Cool. Gold. So we were pretty clear the other day about talking about standard deviation. Someone was very upset about the discussion about I didn't explain this correctly, and that you could just get it with Bollinger Bands, and Bollinger Bands are better, and I'm a fool, and all that kind of stuff. So I am trying to simplify things. There's no doubt. I'm trying to say this is measuring an average, and this is determining some sort of deviation from the average. Okay? And to be honest, I haven't pulled this particular indicator apart to actually see the kind of math it's doing. But I've done the math. I've taken a class. I've done the math. I've done the formula, passed the test, and got an A- in the class. But whatever this particular indicator is doing, I honestly don't know. But honestly, it doesn't matter. What I'm trying to tell you is this is an average price over this time period, and that it's also looking at when price deviates from that. Now, is it one standard deviation from here or two standard deviations from here? I actually don't know the math of this indicator, but that wouldn't matter. This is trying to say, typically, based on whatever math it's using to measure, that typically this is based on this deviation, this is quite oversold. That's all it's saying. Based on whatever math it's using, whatever inputs in the model, it's saying this is, fairly overbought. This is very oversold. This is very oversold. And that what the math is trying to do is, or the theory of the math, is that when it's way overbought or way oversold, it has a tendency to revert back to the mean. Okay, and the mean is easy. Add up all the prices and divide by the number of prices, and you get the average. And then you create a slope, which I've explained is y equals mx plus b, and that gives you a slope over time. So it's measuring rise over run to give you a slope, a rise over the run in the change in the average, then some sort of standard deviation. 1 standard deviation, 2 standard deviations, 3, 5, 10, a million, it's whatever is inputted in here. So if it's not 1, it's 2. But that, again, is irrelevant. Based on the tool, the programming of the tool, it's saying based on historical averages or whatever, this is pretty oversold. Okay? Okay. Well, Michael says, because 95% of prices fall between 2 standard deviations when measuring a mean. Yeah, you got to be careful from that, though, because it's not always helpful, not always powerful, because you can have prices out here and they're called outliers and you might not include them, or you might include them and then it just widens up and change what happened in the past. Or my favorite is, how do you feel about a 99% versus 95% of all prices? Well, it's like me saying, today, I'm 99% sure the moon is not going to crash in the earth and kill all of humanity. I'm 99% sure of that. And you're like, you know what I mean? Okay. So anyways, it's just a tool. So look at it this way. What's the slope of the trend? Is it up or down or sideways? 2, where is price relative to the average? Okay, that's all you use it for. Great. But at that time, 2 days ago, I said, well, isn't this interesting? Okay, and we talked about it maybe acting supportish here and maybe working its way back to the mean, from which if you're a bear you would sell, or of which a bull you've already bought, okay, and would probably challenge here next week to get to the top. Okay, this chart, this indicator doesn't tell you if it's going to go up or down. Now, by the way, nothing tells you if it's going to go up or down. That's you. So if you're a bull on gold, you'll say, well, we kicked off support, and this is your monthly buy. Okay, and you're at support. Price swing support and regression support. So if you were a bull last week, the week before, the week before that, the week before that, the week before that, what we had discussed is, yeah, you should probably consider it, dude. Time to get up. Okay? And bears are probably better off selling higher, and the first real opportunity is probably somewhere around the average, right? So therefore, you're going to look at it, the equal and opposite to this line here. This is the monthly M2. The opposite and equal, where bears would definitely sell, is way up here. Do you understand? They're all basically the same here, monthly M3. So to say how similar they are, because I tell you, I don't care if you're a bull or a bear. It doesn't matter. If you trade properly, you're probably going to make money. So monthly M2, is that support? Yes or no? Yes. Is this support? Yes. Then maybe you should be thinking about buying in here. Okay, if we were up here, is this monthly resistance? Yes. If we were 2 standard deviations above the mean, would that be considered overbought and vulnerable for profit taking? Yeah, then you should probably consider selling. So it doesn't matter to me if you're a bull or a bear. If you're selling high at resistance as a bear, you'll probably make money. If you're buying low at support as a bull, you'll probably make money. Now, how much money will you make? I would guess under current market conditions, because this market is still technically more bullish than bearish, a bull would make more money. Why? Because a bear, to make a lot of money, would have to reverse the entire market And I don't plan for that. I don't assume to reverse the entire market. I assume the trend will last forever and ever 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 and ever. Exactly, Michael. You are exactly 100% correct. They're all forms of support and resistance. Okay? So anyways, that's gold. Okay. So we talked about this. If oil is going to bounce up, it's got to get back above and start working its way here. If you're a bear, you're going to continue doing what you've been doing. Down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 down. That's on a higher time frame. On a lower time frame, right? Down, 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 up, sell, down, 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 up, off the 21, sell, right? Down, 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 up to the 21, sell, down, 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 up to the 21, sell, down, 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 up to the 21, sell, down, 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 up to the 21, sell, down, 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 down. Now, the interesting thing is you're like, oh my God, I've never considered selling off the 21 like that. Is that anyone thinking that? Down, 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 up, sell at the 21. Down, 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 up, sell off the 21. Down, 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 up, sell off the 21. Down, 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 up, sell off the 21. Down, 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 up, sell off the 21. Down, 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 up, sell off the 21. Down, 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 down. Okay? That's the whole point of strategic and tactical Forex trading. In fact, I take it further. I further refine this notion. Right? In fact, I say sell the 5A cross off that 21. Sell the 5A cross. Sell the 5A cross. Sell the 5A cross, right? This one hits an obvious target and maybe by then you're done, or you're going to sell the 5A cross. Double top, drop, whatever. This one is very questionable. But this is classic, 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 classic. And then in here, yeah, I think it's like this. It's very unclear if it's going to go up or down. And it's very clear we're at support, so be careful. Peter says, sell off the 21 in the 4 hour only? No, absolutely not. Any time frame you're trading on. Okay? So I often switch between time frames too. So if you were in boot camp when I traded 3 hours a day with FX boot campers, one of the main things we were doing is finding congruency between the 15-minute chart and the 1 hour chart. So, right, on the 15-minute chart, I would sell a 5A cross down off of the 1 hour 21 EMA, for example. Michael mentions trying to turn a large truck around on a small street. I think in my book I talk about turning a cruise ship around. Right? How do you do a 180 in a cruise ship? So the issue here too, I forget who made the comment just now, but like, it's not the pivot point driving you out, it's this. Okay? This goes back to May. Actually, even, well, we'll call it May. Okay? How many professional traders, because we know this is oil, there's definitely professional traders trading it, right? How many professional traders see this area as supportive? What percentage? Is that right, Michael? It's a truck. Well, I've never read my book. so, so I'll bet on you, buddy. I just don't remember writing it as a truck. It just doesn't seem like something I would write, but it's valid. It's a great analogy. Right. So what that means, guys, is there will be some profit taking here. I'm predicting human nature, nothing more. And somewhere in here, there'll be some profit taking. It's not that it can't go farther or go up, but this is where profit taking will occur. And then I think that a lot of people will wait and try to find out what the next move is. Is it going to be up? Is it going to be down? Right? But selling here and then exiting here is just pretty logical. So so we're at 50, and this is why I'm trying to turn your brain around and say what you shouldn't be thinking this anymore. Okay? You shouldn't be thinking about this move anymore because that's already happened. So now you need to make a decision here. What's the future? Do you believe oil is going to recover, or do you think it's going to decline? Now, there's consequences to all this too. If oil falls to 40, there's a big thing. What happens? Well, inflation drops. What happens if inflation drops? Central banks cut. Okay? What then happens to currencies? Okay? That's for you to decide. I mean, there's like, that's a good one right there, cause and effect, right? You could take this farther and say, well, then oil companies are going to go out of business and all that kind of stuff. Well, we don't need to go that far. Roger's thinking about seasonality. This would be a good time to buy off that. Well, I want you to think of it differently. I want you to think of, will oil go back to $65 by the end of the year? I want you to make that decision first. Is it really a bus? That's interesting. So, right, Roger's saying, is this a good time to buy seasonality? Well, then think of the season. What's your opinion? Are we going to 65 or are we going to 35? If that's too extraordinarily low, then let me take it back because I don't mean to be extraordinary. Okay, let's do it this way. 45. Well, it even seems to me you could go from 45 back to 65. So maybe I should be a little more extraordinary. Right? So what would have to happen if we're going to breach 40? Well, the coronavirus is going to have to really, truly explode. Right? A true global epidemic. That could happen. And if that happened, oil would drop to 35. So that's one half of an opinion. The second one is the coronavirus gets contained and we need to catch up our economic activity, which means there's a sudden surge in demand. and it continues to the end of the year. This would also assume Trump gets reelected. By the way, the Democrats, in my opinion, really look like they're absolutely, totally struggling. Even within their own party, they're struggling. And I'm listening in the mornings. I listen to Bloomberg, and they're not a Republican station, right? So it just seems, from at least a Wall Street point of view, the whole Democratic Party is completely struggling, and that Trump's approval rating is surging. Now, some people might hear right off the bat get very angry for me saying all of that. I'm just trying to look at things from an economic point of view. I'm just trying to make money. So I'm Canadian. I don't have a political party in the United States. I don't even have one in Canada. Okay, I don't have a political party. So let's just try to make money. Okay, even if the wrong person wins in the election, let's try to make money. Okay. So, anyways, this going back to 65 means the virus is not as bad as we thought, and most likely there's a continued stock market rally on a Trump bump. Not because Trump is good, but because we already know what to expect from the Trump White House. We know who's in the Trump White House. All the personalities are the same. If you elect someone else, if you elect a Democratic president, okay, now you got a president, and you'll know their running partners, so you'll have a vice president, but you won't have anybody else. Who's going to be the secretary of this and the secretary of that? And what are their policies? And are they pro-business or anti-business? Are they pro-trade? Are they anti-trade? Like, we don't know any of that, so that is not good for business. By the way, the storm is just a raging out there. Raging storm. Raging storm. Cool. So, that is how I think of it. You understand how, let's say, simplified that is? But the thing is, from that simplified point of view, between now and the end of the year, I can set up trades that support that theory. And I can stay away from trades that don't support that theory. Is that right, Ron? Be careful, man. Don't drive 90 miles an hour. That's dangerous. I do not recommend or support such behavior. I'm right here, 8. So anyways, that whole process right there is good. So I'm going to say I'm the $65 guy. So now I know what to do today, tomorrow, next week, next month, next year, or all the way to the end of the year. Now, maybe one sort of like, why not 35? Well, if the coronavirus is truly that bad, then I will learn about this and I'll have to adjust. Okay? Has anyone gone back and looked at previous global crises like SARS? You know, not when did it happen. Did you look at the market? The market, if I remember correctly, did this. Very, very worrisome, very, very worrisome. End of the world, end of the world, end of the world. Oh, it's contained. And it is a V-shaped reversal. It's the end of the world until it's not the end of the world. And money gets redeployed. Ed, Ed, you're in Hong Kong. Did I remember that correctly? Because SARS is obviously something related to Hong Kong, right? I think you're in Hong Kong. And it devastated Hong Kong. And Joe is too? Joe's a Hong Kong boy. Yeah, I'm not saying they're the same, Ed, but what I'm saying is, oh, and Peter's in Hong Kong too. I'm really, Peter's in Hong Kong too. Oh my God, I want to get back to Hong Kong so bad. Anyways, if I remember this correctly, and if I'm not, oh, you traveled to Hong Kong plenty, but you're okay. Um, but you may remember this because of your association with Hong Kong, right? It was devastating on Hong Kong. Real estate prices dropped by 40%. But how did you do if you were an investor at that period? Well, they went back to full price and then they doubled and then probably doubled again in those 20 years. And I think they'd happen pretty quick too. So I'm not saying there's a relation between SARS and the coronavirus. But we're either going to a zombie apocalypse or we're not. This is how I'm thinking about it. This is why I'm thinking out loud with you, because I don't know the future any more than you, right? But when it comes to talk about war, lots of people get nervous. And they wonder, is the market going to crash? Is the market going to crash? Is the market going to crash? And I say, well, look, it's not going to the market's not going to crash until missiles are in the air, because what you have to do is force someone that has billions of dollars invested either in an investment like the stock market or something, but most business is done in business transactions and building factories and building skyscrapers, and it's those kinds of deals. And the market has to be so bad that someone that makes, let's say, $100 million salary because he's managing a $10 billion portfolio suddenly says, you know what, dump the portfolio, give all the money back to the clients and stop paying me $100 million a year. It has to be pretty bad for that to happen, right? Or like stop building the skyscraper, or, can you imagine Elon Musk if the timing of his new gigafactory was a little off? What would it take for Elon Musk to come out and say, look, we're 80% done our new gigafactory in Shanghai, but shut that shit down. We're pulling the plug on this project because of coronavirus, right? Like, it would have to be very devastating. People would have to be dying in the factory, right? So I don't know if we're quite there yet, right? So at some point, you have to pick a side, though. You can't be stuck in the middle. I think that's more dangerous for most people here. Remember, I preach to teach, right? This is not my opinion. I'm trying to teach you how to make a decision and then stand by that decision versus, I don't know, trade everything, right? So I think it would be healthy for you to pick one side of that equation and then stay with that. And of course, you can adjust as you learn, right? So if a week goes by and all of a sudden people all around the world have hit the end of their incubation period, and all of a sudden you're like, wait, it's not 500 people, it's 50,000 people. New information, then by all means adjust. Okay? So what I'm saying, Michael, is we may be risk off now, but by the end of the year, we may be risk on. And past observations show that this move from risk off to risk on can happen in a day. So Steven says car factories are shut down, right? And all this kind of Starbucks and right. Yes. Okay. But what we're talking about, I'm trying to think of a way to describe it based on like economic theory. Okay. It's not, this is not me preaching. Okay. So we have demand. Okay. You guys remember I did the demand side of the equation and this, right? Remember me doing the exogenous demand shock? And then someone else talked about, and then a change in supply, and then I changed the supply, and so we did that. So let's break down demand into what the virus may be doing now. There's two things that can happen, economically speaking. Okay? So, yes, car factories are shut down. Yes, it's going to affect the global supply chain, in particular for autos and such, right? Because a Ford F-150 probably gets a lot of parts from Wuhan. Okay? So as those inventories in Detroit get dwindled, at some point they're going to want to reorder new parts, and Wuhan shut down. They're like, sorry, no parts. Okay, so we have to make a decision here, and this is a fluid decision. The worse things get, the more your response may change. But you have to decide based on current knowledge, is this simply a delay? Demand delay, meaning in 3 months, will orders skyrocket in China because they're backlogged for 3 months? Like, think of it this way. Let's make up a number. You have this factory in Wuhan. You provide rear view mirrors for Ford F-150s. And typically you sell 100 million whatever units of currency. And 1 month goes by, but the factory shut down. 1 month goes by, the factory shut down. Another month goes by, factory shut down. All of a sudden, all clear by the World Health Organization. It's contained, it's not spreading, we have a vaccine, everything's good. And suddenly the factory opens and they get $300 million in orders. And they're actually paying extra, and they're like, right? I guess I don't need to go that far, but they could even say, you know what? We'll pay you $400 million. Just send us these parts as fast as you possibly can. Work people day and night, 24-hour shifts. Whatever you need to do, get us rear view mirrors today. Don't ship them on a boat. Put them on a plane. Let's get the factory rolling. Okay? That's what happens into a delay. So what happens by, let's say, summertime? Chinese industrial production and factory utilization numbers will be screaming through the roof. Factories hiring as many bodies as possible. They might be ordering new machinery as we speak to increase the efficiency and production, and going gangbusters. Demand for iron ore just skyrockets. Demand for coal just skyrockets. Demand for oil, everything is turned on full steam ahead, right? That's demand delay. But what if things get worse? 3 months go by, 4 months go by, 5 months go by. Ford Motors just cannot make F-150s. And they start laying people off, which then ripples through the U.S. economy, because then that means other people lose their job, which means other people lose their job, which means they're not going to Supercuts, they're not going to Arby's, and so on and so forth, right? They're not going to Sam's Club and buying giant screen TVs. And that is called demand destruction. Because the TVs they didn't make or didn't sell will never be bought. You understand? The haircuts cannot be deferred. Right? I guess they could. Can you imagine you show up, you haven't had a haircut in 4 months, we're like, oh my God, look at that guy. You're like, but hey, the coronavirus, right? So you have to, like, are they delaying and deferring their purchases they would be making today into the future? Or will they just never make those, right? And so if it's actually demand destruction, that money is lost. That productivity is lost. Those orders are lost. And we do not get a recovery. Okay? We just sort of get a reboot. But it will be hurtful. If Americans lost their jobs during the period, it'll be a long time to recreate that demand. Okay? So over this period of time, you might find, like, let's say we find out tomorrow that the World Health Organization says we have a vaccine. Okay? That demand that's been deferred this whole time instantly returns. Because in the market, it's the assumption of future. We're not talking about literally, you know, the people need their gas tanks filled now. What's people are pricing in the demand shift, the shift of the demand curve into the future. Because this drop here was a shift of the demand curve into the future based on the knowledge that this virus could destroy global economic activity. But then we might have new information say, no, it wasn't destroyed. It was just deferred. All that pent up demand will come right back. And, you know, boom, we're game on again. Okay? Well, Ed, this is my problem with such things. Like Ed says, well, another reason for the Fed to cut. But that wouldn't help anything. But it doesn't stop the government from doing stupid things. So anyways, I'm thinking out loud with the hope that you think about it too. If that was helpful, would you take a moment of your time and click the like button? Thank you. I appreciate that, guys. Thank you. So right now, half of you enjoyed this webinar and the other half have not given any feedback. Cool. Yeah, cool. Right on. Just, right, this is what we're supposed to do, right? Oh, yeah, John F., please email me again, okay? Thank you. Have I ever traded nat gas? Actually, I don't think I've ever pulled the trigger on natural gas. Brent, yes. Oil, yes. Oil futures, yes. But nat gas, no. I don't think so. But I do believe it trades differently than it used to. The way I remember it is that nat gas went the opposite direction. There was an inverse correlation, but I don't see that anymore. They all look down. 4 hour, that's 5 minute. Okay. Okay. So anyways, if you are a bull on oil, you're probably looking at it this way, all right? And if you're a bear, you're looking at it from a higher time frame, so you're probably looking at it this way. Is it Thursday today? Oh yeah, I guess we got to do the swing trading group. Now remember your homework, swing traders. Remember your homework. Thank you, Jean-Guy. Sometimes I don't even know what day it is. And NFP tomorrow, correct. Yeah, I wonder what changed. Yeah, I don't know. But like I said, since I never really traded it, I don't really know. Wasn't that nice to have this thing going at that time? You're like, I wonder if the trend has changed. Yeah, I wonder, huh? All right, so we did Swissy pairs. I don't trade Swissy yen, Molly. They're both funding currencies, so I don't trade them together. I apologize, but it doesn't make sense for me. Some of you guys had exotics, I think. I'm not sure if we did exotics. Okay. So let's take a look at Euro Turkish Lira, for example. I have this set up as swing trades. Okay. I think these are day trades, though. Biased pivots, daily. So I have this set up for day trading. Okay. And I will do the day trading course, not this Monday, next Monday. Okay. I haven't been able to do it. But anyways, this is day trading and one of the things we're going to cover, right? So you can see here on Euro Turkish Lira, I'm set this up as a bear, and this was the sell. Worked out all right. This was the sell. That worked out all right. This was the sell for today, right? And this is tomorrow's sell. Cool. So far, right? Down, 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 up, up. 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 Okay, so on and so forth. Okay, here's USD ZAR. This is a sell zone. Let's do Peso. How many people took the Peso trade this month? Mark says, how do you define funding currency? Dollar, yen, and Swissy are borrowed by financiers to leverage their investments. Okay? So EuroCAD would be a cross. Okay? But Swissy yen is funding pair versus funding pair. They're basically the same thing. The only difference is short-term relative strength, but I don't trade that. Okay. All right, so let's look at Peso. Okay. What day of the month do you trade Peso? Or look to do it, right? Okay. All right. At that period that I have highlighted, okay? And am I a bull or a bear? Right, I'm a bear. So I have sell zones here. This was my sell zone on the first day of the month. Or sorry, the first day. These are day trades. Second day of the month. Third day of the month. well, trading day, right? And then here we are. So they're just rough guides. But I had made a decision in the future, right? Or for the future, that in this period here, I'm going to be a bear. Okay? So here's my first opportunity. Here's my second opportunity. Here's my third opportunity. And they're guides, right? Now, they don't, you still have to do your other type of analysis, but they're guides, right? So here we are on the second day of the month. I get a rejection off the first sell into my sell zone. Okay? Cool. Down, 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 down. Sell off the 21. Now this is worrisome. This has to get on down now, or, right? Or it's going to not behave bearishly. Sebastian says, how do funding currencies typically work? Well, when you want to put your money at risk, you borrow a whole bunch of funding currencies and then you spend them. When you are fearful of the world and you're very uncertain about your ability to make money, then you decide not to borrow. You understand? So, of course, we can look at the confluence, which is much more important. And can you see I got the full Monty here? Oops. Hang on, I got to get this thing out of the way. I got the full Monty here. Is this a pivot that's sellable? Yep. Faux show. Down, 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 up, up, sell, down, 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 up, up. Now, this whole area here is a sell zone. And in particular, this pivot predicts this pivot, but we have this, I'm going to have to overlap. Okay, this area here is weekly, and that predicts this level here, which we nailed. But notice that we kicked off the monthly and respected that. Okay, and then the monthly pivot, I have to decide because we actually peaked up here pre-February. This was still the end of January. And generally off of this MM3, which predicts MM1, which is right here. But I'm actually short off the central. So if I'm treating that as the high, then I would go down to here. What I really should be doing is combining the two. Okay, so it comes down to this now. We roll over here, and I take this down. Or if we breach up, I take my money and I walk. Okay. Yeah, I agree with you, Raymond. I'm more interested in showing how to plan setups with the proper rules of engagement. I'm less concerned about profit taking and areas and stuff because most people here are fairly new, and I'm trying to teach conservative, repeatable planning techniques, right? So, yeah, so, but you're right. But if I got out here, we'd have nothing to talk about. Anyways. So we did Turkish lira yen, we did USD yen, Euro ZAR people have been talking about. Yeah, it's because it's been going the wrong direction. So should you be doing carry trades on this pair going this way? No. Okay. So this is dangerous because to be a carry trader, you can only sell this, and this is why I have sell pivots. Okay, these are all selling trade setups, but you don't sell higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You don't sell in a market. So you might be a bear, you might have good reason to be a bear, but you do not have bearish market conditions. So you shouldn't be trading this. I don't care if you're in the pivot area. Okay, you don't have market conditions. Now, if you start doing lower lows and lower highs, maybe. Okay. Yeah, hey guys, if you're new, will you take the time to subscribe so that on Monday when I click stream, you will be notified and you can come right into the room right at the beginning. Okay? And it's YouTube. YouTube does it. I don't get your name and email address and all that kind of stuff. It's just you're asking YouTube to let you know the next time I stream. Now, tomorrow I'm doing non-farm payrolls live. Again, I don't know how many months, but it's roughly 170 months. I've been doing that one webinar. So I will not do a webinar here tomorrow. If you want to join that 3-hour webinar, that's at FEB.com. Yeah, since Moses. Take care, Max. So anyway, so we got a bunch of those going on. That's cool. Okay. Remember Aussie this evening? Okay. And Kiwi. This is an amazingly awesome Asian session. Swing trading is at 11 a.m. Okay, Google, remind me in an hour.
Got it. Today at 10:44 a.m. What's the reminder?
Swing trading group.
Got it. I'll remind you at 10:44 a.m.
Okay. So that's it. And the only other thing, I guess, that reminds me of setting up the day trading stuff. So if you guys want to ask me questions about the day trading group, feel free to stay and ask me questions. If not, feel free to log out, and I will see you guys on Monday, unless I see you at FX Street tomorrow. Stephen, yes, you can join today. But remember, the whole point is if you join the swing trading group today, you're also going to get my day trading course, which I'm developing right now. I've collected feedback from people. I've done 3 surveys about how I can help you be a better day trader. So you end up, so you can join today's group, but then you can take the whole swing trading course, and then in, I guess in a week and a half, then you could then go through the day trading course with me. So you're getting the day trading and the swing trading course for the same amount of money. You see what I mean? So if you have questions, I'll stay a couple extra moments. Okay, it's not a sales pitch. I just want to know how to help. How to join your swing trading group. Swing.fxbootcamp.com. Okay. Guess I can do it this way. So that's all. So if you have particular desires of learning how to be a better day trader, okay, now's the time to give me the feedback because I am designing it. So let me know how I can refine you as a trader. Peter, yeah, I'm considering some major changes on that, but not immediately because it'll take so much time. But yeah, I am thinking of different models and such. Am I adding different tools? Yes. Like you'll get the, for example, you're going to get the MT4, MT5 day trading tool that I have here, right? So you'll get the tool and the template so that you'll have this, and it's always telling you the next sell zone is here. This is telling you tomorrow's sell zone, and it's told you all day what tomorrow's sell zone is. So you're already looking at it's like saying, hey man, you should probably sell around 1650. You're like, okay, cool, dude, right? And you got this all lined up. If you're a bear, of course. Now, you still have to decide if those are the market conditions you want, but anyways, right? I'm also going to design like a framework, like a really simple framework, literally something you can put into a frame and put on the wall that kind of gives you the how to set up your day trades properly, you know, so that you can look at it and refresh yourself. Look at it and refresh yourself. It'll become second nature. That be able to just look up and you'll see the step-by-step process. But then there's another tool that I'm going to add where you can actually go through a checklist on your chart to say, did I do step number 1? Yes, check. Did I do step number 2? Yes, check. Did I do step number 3? Ooh, not yet. That's a good idea. Go do step number 3. Great. Check. And that'll actually be on your chart. You can check it and uncheck it. Just to kind of to confirm your framework. You know, stuff like that. So it's pretty cool, right? So yeah, the answer is yes, you'll get some tools and templates and stuff like that. Of course it's a good idea. That's from Monty Python's Quest for the Holy Grail, where God speaks to Arthur. Arthur, I have a quest for you to be a guiding light in these times of darkness. And he says, oh, good idea, sir. And God says, of course it's a good idea. What's your risk-reward ratio? It's interesting. First of all your winners need to be bigger than your losers. And I don't have like a risk-reward ratio because it's actually not that important. Now you might get really upset and you're like, wait, it's so important. What I mean is when you trade properly, your losers are small. And the goal of your trades is to let them run. So it's sort of irrelevant for me to say, well, your trade should have a 30 pip stop loss and a 300 pip target. Okay? But that's what the swing trading group does. We look at, 30 pip stops, let's say, for 100 pip targets or 150 pip targets. But those are weekly trades. And then our monthly trades, same thing, probably 30 to 50 pip stops, but we're going for 300 pip trades, right? So I could easily say, let's say 50 to 150, somewhere between 3 to 1 and 10 to 1. Too late today. TBM. Sorry about that. No, Peter. The swing trading group, that day trading course is going to be inside the swing trading group, and it will be not this Monday, the following Monday. And that we will do that on a Monday, on a Tuesday, on a Wednesday, and then we meet on Thursday anyways as a group. Okay? So yes, you have to pay money to join the swing trading group, but you also get everything in the swing trading group, and you get the new day trading course / group / whatever inside swing. So anyone that's in the swing trading group learns how to swing trade, gets to swing trade with me every week, weekly trades, monthly trades, and then they get the entire day trading course. So it's all shoved in there because there's a lot of congruency between day trading. And I'm teaching the swing traders how to day trade to help them refine their swing trades. So I'm like, hey man, it's needed, right? So I'm not going to charge swing traders extra money to join the day trading group, although I'm pretty sure the vast majority of everyone in the swing trading group would easily just pay. But I'm just going to I want to teach swing traders how to day trade better, but there are lots of people here that just want to day trade. So for example, if you can't sit in front of your charts for 8 hours a day, take the day trading course. Okay? It's not necessarily scalping, that's intraday. But if you don't know what we're going to do today, how could you be a decent scalper? It doesn't make sense to me, right? Yes, not this one, Stephen, the following one. So not the Monday after NFP, but the Monday after that, okay? So that gives me about 10 days to formalize. I've been gathering feedback from people of how I can help them so I can design the course around what people want and need. John, I sleep at night. So yeah, you'll have to email me, wayne@fxbootcamp.com. So the 17th, that sounds about right. Yeah. Thank you, Stephen. Hey, no worries. I know you need help. I know you're asking for help. So email me again. Let's get you taken care of, okay? Molly says, and every month. Yeah, that's right, Molly. It's a live swing trading group. You're not necessarily paying for a course. You're paying for the group. All right. We meet once a week to discuss weekly swings, and we also set up monthly swings. Okay. It's on the webpage. Why don't you just go to swing.fxbootcamp.com? Right here. Swing.fxbootcamp.com. Okay? Yeah, Jimmy says, James says, you get involved, get engaged, it will help. That's totally it. The only way to take it to the next level is for us to work together. That's it. So what we're doing today in the swing trading course, the swing trading group, people in the swing trading group put together plans for the month of February, have taken trades on those, right? And now they're going to meet with me in about an hour, and we're going to go through their swing trades, and I'm going to find out what their logic was, what their plan was, and then where they actually took the trades, and then be able to discuss it together of what they could have done better, what they did well, all that kind of stuff, and discuss it in an open, safe community of other people also trying to master the same techniques. Javier, this is what you would need to know. Okay? You might want to actually also want to do like everything at FX Bootcamp, right? So like, for example, Javier, did you do the fundamentals course at FX Bootcamp? Because one of the things you do by I don't know, the third or fourth video is you're learning how to manage the balance sheet at a commercial bank. So like you're like, hey man, you want to work at a prop trading firm, right, or on a prop trading desk at a bank? So I'll say, well, do you know how banks work? And you're like, no, I don't know how banks work. Well, then that's probably going to be a problem, right? This is my thought. Maybe it is, maybe it's not. But you should know how commercial banks work just on simple terms, right? And then again, will it make you a better trader? Probably not. But then once you know how a commercial bank works and you can manage the balance sheet there, then you'll understand the basis of central banks and how they manage their balance sheet. But then, so you'll have to know like how money works, how the fractional banking system works, and how money grows and multiplies. And like it's banking. It's banking 101. So if you want to work for a bank, you should have that, at least that basic foundational sort of principles put together, because when you work at a bank, they're all going to be talking about banking stuff and central banks and what if they cut interest rates and how does that impact money supply and how does that impact the M3 versus the M1 and all this kind of stuff. And you'll just want to know like how do banks, banking, and monetary policy work. Seems to me, right? So in that case, you'll need to take the fundamentals course, because they're going to talk a lot more about the fundamentals. No, you're going to need to know how to trade, right? But the next step after that, Javier, is you need to know these things. If you're going to work for a bank, you need to know banking. That's all. But you can know banking and not be able to trade, and that wouldn't help you much on a prop desk. But I'm pretty sure if you're sitting on a prop desk with a bunch of bankers, they're going to know how banking works. They're going to know fundamental analysis. They're going to know monetary policy and central banking, right? They're going to know this. I don't think you could work at a bank's prop trading desk and not know fundamentals. I couldn't imagine. Now, maybe some sort of hedge fund you might get away with that because they're like, the results speak for yourself. They speak for themselves. But even then, I don't know how well you'd be at getting into trends if you don't understand how the trends develop and why they're there. So even that, I would be sort of like dubious about the idea that you could only do it technically. Now, if all you're doing is day trading or intraday trading, you could probably get away with you don't need to know nothing about nothing except sell its resistance by its support. But even there's a level of naivete to that idea that, like, why would you not want to know your profession? So, right? So at some point you should learn everything. Okay, so learn how to trade first and then expand. So, cool. Any other questions about the group or the course coming up? Any feedback you want to give me? Wayne, I find it very difficult because I don't know. I can't be at my charts all the time, or I don't have enough money, or it's too stressful, or all these types of things. You want to day trade, but you got some sort of issue. We can explore those challenges in the course. Yeah. Well, so we know you have half a brain, Javier, and we know you have discipline. So now you need like technical analysis, and you're going to need fundamental analysis, right? Cool. Hey, my pleasure, guys. Email me, Lucas. I'll take care of you. Wayne at fxbootcamp.com. Oh, Steven's in. Right on, Stevie. Thank you, Jean-Guy. Thank you, Steven. Thank you, Javier. Cool. And just maybe since I got you here anyways, lots of people have left me feedback in the videos where I ask for your feedback. But how many people here think they cannot be as successful as they want to be because they don't have 3, 4, 5, or 8, 10 hours a day for trading? How many people feel that time is the major issue from them achieving the results that they dream of? Anybody got that issue going on? Thank you, Ron. I appreciate that. I hope you got home safe. Okay. Okay, timing is also something to be worked on a day trade and then intraday trading. Okay? But if you feel you don't have enough time, day trading and swing trading is exactly for you. Okay? It's exactly for you because any time less than day trading, so intraday trading and scalping, you must be at the exact right place at the right time and then do the right thing. You understand that? So if you want to sell off of a moving average, you have to be there at exactly when it, right? And set it all up. So it's not just the right, you have to time everything. Not just the right idea, but you got to be there like in the minute. You might, if like 8 minutes, 10 minutes, 12 minutes are too late, you right? So you got to do the right thing at the right time, right? Spot on. And that's why you got to be there all day. And I do that, like, right? Not so much now that I'm in school, but for 15 years I did that. 10 hours a day, 12 hours a day, right? So you have to be at the right place at the right time and do the right thing. And after that, some news can pop out and, you know, Trump sends a tweet and pa-chow, you get unlucky. And you're like, son of a, right? Day trading, swing trading are not susceptible to that. So if you got an hour a day, you could be an amazing day trader, swing trader, right? And by swing, I mean weekly and monthly. And the volatility is less of an issue and all that kind of stuff. And the interesting thing is you can be at the right place, but you don't have to be at the exact right time. So it takes this time and volatility out of the equation. Okay? And you can sit down the same 1 hour every day and trade. And I'm sure an hour is more than enough. Because I'm going to simplify what you do, the way you look at your life, the way you look at the market, simplify the way that you're thinking, and then give you some tools and timing and some experience that will help you. Okay? Yeah, Javier works all the time and being a father and all that kind of stuff. Yeah, gotcha. So if you have 1 hour a day and it's a consistent hour, I'll show you the best times of day, obviously. So maybe an hour a day is all you need. Probably less than that, quite frankly. Okay? So if that's your situation, day trading, swing trading is exactly what you need. Okay? Right? So you got a job, you're a swing trader, you're a day trader. You got wife and kids, you need to be a day trader, a swing trader. You're at grad school, day trading, swing trading. That kind of stuff. Now, the next step after that, if you so choose, and you want to quit your job and you want to be a full-time trader, you will then learn how to intraday trade and scalp and day and swing, right? You'll do it all. Right? You'll do it all, okay? But you don't need to know how to scalp per se to be a successful trader. But if you want to be in front of your charts all day, Well, what are you going to do the other 23 hours? Where are you going to scalp? And you're going to have fun scalping news, and you're going to have fun scalping off higher time frames, and you're going to have fun stacking your scalps and all that kind of stuff. But do you need that to be a success? No, because why would you do all of that if you don't know the bigger stuff? Okay? So anyways, that's how you go. You don't need the other stuff. You can do it down the road. If you're going to work on a prop trading desk, okay, you'll need to know how to scalp. But how could you possibly scalp consistently if you can't plan your trades for the day or the week? It'd just be total chaos every day, right? We already know, we've already gone through that a million times. That will only lead to inconsistent results, and you'll get your ass fired off your trading desk. Okay? So you need to know all these things as well. But I wouldn't start with scalping. I would end with scalping. Now, when you're surfing YouTube and all these other things, they show you the scalping because it's exciting. Okay? It's exciting. It's sellable. It's gamified. You're like, I want that. I can do that. I'm going to get rich so quick. Okay? But that would be the last thing I would teach. Okay? But I did that. I can do it. I'm pretty decent at it. Okay? But it'd be the last thing I would teach my children, for example. Okay? All right. Any last questions? Well, Ed, there's a way to scalp properly, in my opinion, but that's not the topic of the course because you'd have to understand everything else first, right? But I love stacking and packing them, but I don't scalp like most people. Okay? Back when I did scalp training for people, oh, I don't know, 10 years ago, I was showing people how to scalp 100 pips at a time. And they're like, 100 pips? I thought I was only trying to get 10 pips. I'm like, yeah, well, my trades are worth more. Why? Because I was really day trading into my scalps. You see what I mean? I already had a vision for the day. So when I took a trade on a 1 minute chart, I'm like, look, I just sold the Euro USD. And it goes and it falls and falls and falls and falls. And people are freaking out. And all of a sudden it's up 100 pips. I'm like, holy crap, you just scalped 100 pips. But what they don't know is it's just a day trade. I knew my price. I knew my price. It was a day trade. And I went in, and then, of course, it went my way, and I got some luck. It carried, and it moved that particular day. And, like, great. But it's not amazing. That's the thing. It's not amazing. The part that I find amazing is someone is willing to take a risk, and they're desperate to get out quick. But yet, we know, it's factual, that you have to let your winners run. You keep your losers small, but you would never keep your winners small. It makes no sense. So why would you take the risk and get out with 12 pips profit? It just makes no sense. It makes zero sense. Unless you jack up your lot size and you're like, Wayne, I got $1,000 account, but I just made $300. Like, holy crap. That sounds retarded. But someone else gets all mad. They're like, what do you mean? How dare you? That $300, you know how much money that is for me? And I'm like, whoa, dude. You don't understand that you're going to be dead broke in a month if you do that. Okay? So anyways, I think you guys know that. You know it. This is a business. Okay? Yeah, I am happier for people that move from losing money to breaking even. Because at least they got the right thing going, right? Because now we can fix that. At least the bleeding has stopped. Okay? I would be so proud of you if you could do 2% a month, month after month. It's hardly any money. But the 2% consistency puts you in the number one position of all commodity trading advisors that are focused on global macro and Forex. Right? As reported by Barclays Hedge, who tracks professional traders. The only difference then between you and the number one CTA in the United States is that they might have $400 million and you have $4,000. But your returns are exactly the same, percentage-wise. And that means you are in the category of the best. This people will want to emulate you. People want to invest in you. People will see you as a hero. So you got to get used to that's the path that you're trying to get to. Consistent returns. Low volatility in your portfolio. Nobody wants your risk. Nobody wants your gamble. Nobody wants your bet because they already have money. You understand? An institution, a wealthy individual, they don't want you see you gambling with their money because they already worked their butt off to make that money. They've already put the blood, sweat, and tears in for years. Very, very few people I've ever met just were money rained out of the sky. Okay? You need to show that you can offer low volume or a low volatility and consistent returns so you can compete with real estate. Real estate's doing 6% a year. You're doing 2% a month compounded, which is like 30% a year. Your service is better than investing into real estate. Okay? Or someone says, I want you to hedge Bitcoin for me. You're like, I can do that. Or they say, I'm worried about the pound. Can you hedge that for me? Yes, I can. That's your bias. Your client might come to you and give you your bias. They'll come to you and say, I'm doing a lot of business with France right now. I just signed a contract worth $100 million with this French company. I have to deliver a product in 4 months, and I'm worried that the euro is going to tank. And by the time I get paid, I'm going to lose 5% of the 100 million. But the thing is, I only have a 5% margin. So if 4 months go by and the euro drops 5%, I will earn zero income on this. Like, the deal would have been worthless. I am frightened beyond belief that the euro is going to lose value in 4 months. Even 1% means I have to lay people off. I cannot afford to do this deal again. Would you please hedge the euro for me? Yeah, I can do that. I got your back, dog. Right? And the thing about Forex, you don't need to give me $100 million to hedge $100 million. And by the way, when the euro goes up in value, I'll take off the hedge so you gain. So if things go well and things go lucky, right, I might be able to actually increase the amount of money you make on this deal because as the value of the euro goes up, I'll lock in those profits for you. And then if it starts to go back down, you're protected. You'll make more money because of me. Huh, sounds like a good pitch. So we'll get you there, but you have to be able to carry that out. Okay? So let us be going now. So if I don't see you in the swing trading group in 45 minutes, maybe I'll see you tomorrow at fxstreet.com. And if I don't see you tomorrow at fxstreet.com for Trade Non-Farm Payrolls Live, month 169, 170, I don't know what it is, then I will see you here at the Forex.Today YouTube channel on Monday morning. Please subscribe, please like, please leave comments, and of course, peace on earth. May the pips be with you. May your profits be above average. Thank you for all you do. All right, see you.